Welcome to our Savvy series. I'm Catherine Magana here with Rachel Ivanovich, and today we're going to have a discussion about divorce. And we're going to talk about 3 key strategies for kind of navigating through a divorce. But before we get started, just kind of looking at some statistics. In 2022, there was 673,989 divorces and annulments, yes, it's a lot, across 45 U.S. states that were reported. And also during that same year, there actually were 2,065,905 marriages. So it's kind of interesting. At least there's more new marriages.
Honestly, I think out of the pandemic, people were like, I really like my spouse or my partner, or I really don't.
Exactly. And so as we kind of look at statistics, the statistics say about 50% or half of marriages end up in divorce. However, first-year marriages, only 43% get dissolved. It's the second and third marriages that actually have a higher rate. So we're looking at 60% for second marriages and 73% for third marriages. So it's kind of interesting. And I know we're talking about divorce, but we also do work with a lot of clients that are still married and been married for 20, 30, 40 years. But I thought that was kind of interesting to see that the statistics with
really is.
Divorces and people also getting married.
But if you are going through a divorce, please feel free to call us.
Yes.
Because we'd like to have a conversation with you because you don't want to go it alone.
Well, and you don't want, there are different phases of a divorce too, but you can reach us if you have any questions or if this is kind of unique to your situation. You can reach us at 760-692-5700.
Going through a divorce is not fun.
Yeah.
But I think definitely having a financial advisor, a tax advisor, and maybe even a divorce attorney in your corner, definitely key.
Well, and depending where you're at, so if it's before you're even thinking of a divorce, what's the financial picture? Or if you're in the divorce, what are the assets and what are the kind of what's the plan or what's the financial picture?
Yeah, because what I see with my clients is oftentimes there's only one of the spouses that takes care of the money.
Yeah.
And so there's one person who takes care of the taxes. So I don't know if you're the one who's taking care of your taxes and your finances, paying all the bills, but you need to get a grip on
what you have and where it's at and
how it's invested and, where's the money?
Yeah.
And what money do we have?
And it's interesting because we do meet with clients and sometimes they come to us after the divorce. And at that point, if you have this big house which is great, you have the family home, but then there's a big mortgage payment and you can't afford it. So now you have this huge house and you're now stuck trying to, figure out how to make this work or you have to sell it. And then once again, there's potential tax consequences with everything you look at.
Which is absolutely why you should be meeting with us.
Exactly.
Or with your divorce attorney, but also financial advisor and tax advisor, because like you said, not all assets are created equal.
Yeah.
And the tax consequences, if for instance you were to liquidate that family home, if you were to get it, are different than if you were to receive the retirement accounts or the investment accounts. All of them have different tax implications. So you definitely want to walk through that with a qualified professional.
Well, and then which assets are liquid, which ones are illiquid? Is there rental properties? Are there businesses? Is it retirement accounts? Are there pensions? I mean, there's so many things to consider, and really evaluating and looking at the long-term implications of this. So I think sometimes you think, I want to get through this in the short term, but the reality is, what's the long-term effect? When
a client calls me and says, I'm thinking about getting divorced. Mm-hmm. What do you think? And or, I'm going through a divorce, what should I do? Typically I have them pull the tax return, look at it and say, okay, what accounts do you actually have? Like, do you actually know what your assets are? Because I think a lot of people maybe don't even know because there might be stock options. Mm-hmm. There might be, which is beyond what you have in a traditional retirement account. And the tax implications on those and so when you're dividing up the assets, you want to know, am I going to have a tax implication if I were to take, let's just say the 401ks or the IRAs versus the taxable brokerage accounts.
Mm-hmm. So knowing how things are titled and, once again, what's the tax ramifications of some of this is extremely important. And then we also have some that are kind of looking at post, divorce and what does that look like for them. And we have worked with some of our female clients where they now are divorced, and then we put together a financial plan for them to figure out, okay, what's next. And that entails looking at your budget and your expenses, and also what you're, are you earning more, or did you go back to work, or if you haven't, what does that next career look like for you? Because there also could maybe be some alimony or other expenses being covered.
And previously, alimony was taxable for the recipient and it was deductible for the payer, but it's not anymore, which actually the laws are going to change after 2025. But I mean, that's definitely something to consider when you're negotiating your divorce settlement is, are these assets am I going to be paying tax on what I'm getting?
Yeah. And so there's, once again, depending on where you're at in, I'm thinking about divorce, because I have those conversations too.
Yes.
I'm thinking about it, but I'm not sure. And then you have those that are like right in the middle of it and they're still trying to discover and figure out, what does this all look like? And then we have those that are kind of post, divorce. And, sometimes, it's interesting to see the ones that are post divorce, like they've gotten through, because it could be, a couple years, to go through it, and you can actually see that light at the end of the tunnel, and them having a plan and knowing kind of what's next.
I had a lot of clients this year. Honestly, it was one of the biggest years where I had couples that were divorcing, and one of the biggest questions that I got was, should we file jointly or not?
Yeah.
And so, I mean, it's a real question of, okay, are you getting along right now or not? Because sometimes divorce can be really contentious, and that's kind of this year. I had so many couples. And if you're still legally married, you have to file you have two choices. Mm-hmm. Well, no, actually you have three choices. You can file head of household if you have a dependent child living with you, if you're the custodial parent, if you're not living with your spouse. Mm-hmm. Okay, so you can't live with a spouse the last 6 months of the year, and you have a dependent child, you can file head of household. You can file married filing separately, which is a terrible filing status. Mm-hmm. So you definitely want to consider that. Or you can file married filing jointly, which typically works out the best for both parties, because if one spouse goes married, head of household, and the other goes married filing separately, which is how it usually works out, one spouse ends up taking it in the shorts. Yeah. So you definitely want to have that conversation with your advisor. How should I be filing? If you get divorced on December 31st, you're considered single all year.
Oh, interesting.
Yes.
Okay.
And so you also need to consider with that filing status, if you live in a community property state, such as California, you have to split your income right down the middle if you're going to file married filing separately.
Oh, interesting. Even if you didn't make that as much, you just...
Correct. Yeah. So if you lived with your spouse at any time during the year, you have to take, up until the time of separation, you take your spouse's half of their salary and other income, and you report it on your return, and vice versa. So that's why married filing separately oftentimes can work out to really hurt you. And so this is a really big question to ask if you're going through a divorce.
I just had somebody ask me about, or she was telling me about her situation. She said that she's thinking of going through divorce. She hasn't filed, but they've been separated for a little while. And she said, and he owes taxes. And I'm like, well, did you do your taxes together? She says, yes. I'm like, okay, well,
that's one of the cons of filing jointly in a year when you're separated or getting divorced, because so the IRS has something called joint and several liability, which means if you file a joint return with somebody and they decide not to pay the taxes, you're on the hook.
Yes.
And if for some reason you get audited down the line, so let's say your divorce is final and you filed a joint return in the last year, and then 5 years later, the IRS sends you a love note and says, okay, well, you're getting audited. Guess what? Now you have to talk again. And if they assess or reassess tax and your spouse or former spouse decides not to pay that tax bill, you're still on the hook for it.
Well, it's interesting. My sister had gone through a divorce, and unfortunately, she passed away a few years ago. But some years, came up from her when she was previously married. There was a little tax situation. It wasn't like a big thing, but it was enough where you still had to bring in her, her ex-spouse about this. But here you are thinking, okay, they were divorced settled for years and everything. And then you're going through the estate, and all of a sudden you get this tax notice. You're like, oh man. So it's interesting, because there is, like you said, there's that if you're married still.
So even if it may be worse to file separately, it might be better to file separately.
Yeah.
for other reasons.
It's not always just about the
money
yeah.
that you have to pay right up front. It could be just let's plan for the future and make a decision, what makes sense for us.
So we covered a lot of different scenarios. Obviously, it's not a one size fits all. It's very unique to each person, and the timing and the emotional aspect and the financial aspect. There's so much that's involved. We look at financial planning and retirement plans and investments for a lot of our clients that have gone through divorce or going through divorce or post-divorce. And so we'd be happy to provide a consultation and kind of talk through your situation. So if you'd like to join us or give us a call, you can reach us at 760-692-5700. And I think that covers it for today.
You don't want to go it alone.
Exactly. So until next time, remember to savvy up.
Please stay tuned for important regulatory disclosures.
Savvy Women Wealth Management is an SEC registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.